All right, let's jump into it. People can still join and jump in as they need. Thanks everyone for joining today. We are going to be talking about a little specific topic. So we have a project that we just launched, and it is an opportunity zone project. We've been getting a lot of questions about opportunity zones, and so we wanted to clarify any questions and just jump into exactly what an opportunity zone is and if it can benefit you or if it's not going to benefit you. So let's jump right in. All right, quickly here, quick disclaimer. So typical disclaimer, this of course is an investment. We are an investment company. Investments have risk, but additionally, this is all, some tax implications and tax law. We are not CPAs and we are not attorneys. So the information we do believe to be accurate, but you always want to talk to your CPA or accountant and review anything that you have on your personal statements, your personal financial means. So that's a quick little disclaimer. All right, meet the panel. So first up, we have Sarah.
Hey guys, how's it going?
And then we have John S. Nichols, our COO.
That's me.
And then we have our CEO, John Sr. Oh, you might be muted, John. You're muted. There we go.
Hi, everyone. Sorry.
Perfect. And then myself, Anthony Walker, and I am the Chief Investment Officer. All right, quickly a little background of us to kind of show what a little bit we know we're talking about. I'm actually going to start at the end there. So this is our third op zone fund and development. We've done one other one in Idaho. We've also done one in Oregon, and we have looked at many other ones. So far, we've funded over 12 million into op zones, and that's increasing on a near daily basis with the Sandpoint project being open. We currently have a portfolio of 116 million in assets under management, about 329 units. And then we have another 347 under development, which will damn near develop that, management under our assets under management. We have lost none of our investors' capital to date, and we plan on keeping that. All of our assets are managed correctly, and we are not in any sort of credit crisis like many other developers out there. And we are pushing to raise more equity and kind of grow our team over the next couple of years. All right, John's going to hit on the projects that we have done in op zones.
Thanks, Anthony. So these are just two of our projects that we've completed and leased. The bottom one there is called Salmon Crossing. That's located in Redmond, Oregon. That opportunity zone is in a really good spot just off the highway there in town. And we found that project through Land Broker and was able to build that through Opportunity Zone Investments. And then the other qualified Opportunity Zone project we did was in North Idaho in Post Falls. That project is 53 units. We were actually on the front page of the newspaper when we announced the project, as it was the first project in North Idaho that was an Opportunity Zone fund, a qualified Opportunity Zone fund. The city was really excited for us to take advantage of that. Long story short, different communities, when they got I guess you could say the memo that opportunity zones were a thing when the Tax Cuts and Jobs Act signed in 2017, what we realized is that a lot of towns did not take advantage of it. Coeur d'Alene, for example, where our office is located, missed the memo, didn't decide to do it. But Post Falls did it, and so did Redmond, Oregon, and they picked a great spot. Sandpoint also did a great thing by designating a large portion of their downtown area as an opportunity zone. So some cities saw it, some cities didn't. The cities that did, you see across the country, developments have really taken off in those areas.
Awesome. So first we're going to jump into what an op zone is. So first came around in 2015, the idea surfaced, and then the idea was to pick areas in the country that were lower income compared to the other areas around it. Doesn't mean that they were low income. It could just mean that the incomes in that certain pocket of a city were lower than the surrounding areas, again, to incentivize development from private investment. So that was the idea surfaced. They really wanted to get private developers, private operators to invest into these areas. So bipartisan, both parties like this idea. And so 2017, with the the Jobs Act and tax cuts, they passed this law. And that's kind of when it began, but really it didn't take off until 2018, 2019. And then 2018, that's kind of when you started seeing more money pour into it. 2019 was when we did our first OpZone fund. That was the Post Falls Opportunity Zone Fund. And then 2023, we actually launched this OpZone Fund in 2021 when we acquired the property at Sandpoint property we bought in 21. And then 23 now, because it took so long for the policy to adapt, basically from 2017 to 2019, people were still figuring out, understand the tax implications and everything. There's current legislation in there that could actually extend these benefits by 2 years, but that has not passed yet. So we're not going to account for it. We're going to keep to the current example that basically this sunsets in 2026. So all the benefits, basically this won't be around unless it's passed again after 2026. Anything to add there, Senior?
I think the important thing is that, they've talked about extending it. I think that may be for the next administration to decide and try to push. It was bipartisan when it was passed originally in 2017. It took a while for it to take, for people to catch on, mainly because of COVID. And so it kind of slowed everything down. And so the idea of creating opportunity and investment in areas that are undeveloped or somewhat have been overlooked or just need extra attention is still a good one. But
Right, there's been
now,
over $10 billion invested in OpZone since this was passed. It's highly successful.
it is, and I think it's bipartisan, support on that. Whether it gets extended past 2026 is yet to be seen. But right now, 2026 is the sunset.
Right. Excellent. And so John's going to jump into a little bit more about the Opportunity Zone, kind of what the tax implications are and what you can expect if you invest into one of these properties.
Thanks, Tony. So the Opportunity Zone, the way it works is you can invest non-capital gain money just as a regular investment like we do on our other projects. But the OpZone qualification basically gives you a vehicle to take any capital gains from anything that you sell that created a gain for you. So real estate, gold. We've had people sell cars, antiques, boats.
Cryptocurrency is a big thing today.
Crypto.
Bitcoin at all-time highs again. We've had, a lot of money coming to OpZones from cryptocurrencies.
Yeah, absolutely. So you're able to roll that gain money into the OpZone fund, and it gives you a couple things. One is it defers the amount of tax that you would owe until December 31, 2026. You do pay part of the tax that you would owe by December 31, 2026. And then as long as you hold the money in the fund for 10 years, you have the opportunity to sell your interest, or if the property is sold, if there's any gain at all, it's all completely tax-free,
Right.
Which is huge. So there's a lot of different options for people. If you have real estate, for instance, if you do a 1031 exchange, you have to replace debt. If you take a gain and put it into an OpZone, you don't have to replace your debt, which is huge. So we've had a lot of people using that for estate planning purposes.
Senior, jump into that a little bit more about estate planning and why it's such a powerful tool.
Yeah, so when you roll your money into an OpZone, especially if you're over the federal estate tax exemption limit, which right now is 12 million. So we've had a lot of people use the OpZones as part of their estate plan. And what that means is when they roll that money into an op zone and they're being told by their CPAs and tax attorneys, you should verify this with your own estate plan, that if they're over the exclusion limit, this would qualify for that. And so if that interest is sold or the building is sold and it creates an amount over and above that 12 million exemption, it's completely tax-free. And that's a huge tax shelter for people that have been taking advantage of that. And so there's lots of other ways to take advantage of the op zone depending on what type of gain it is. We always recommend that you check with your tax advisor. When this first came out and we did River Falls, Treasury really didn't have a lot of guidance for us on what types of gains qualified and what their interpretation was. They didn't even have the tax forms that you file with your tax return. But now we know a lot of that stuff. And so as long as you keep your investment in for 10 years and you have a gain on top of that, it's completely tax-free. So that's a pretty neat incentive for people to look at op zones, depending on what it is and where it is.
Right, and this step up in basis paragraph here, we've passed that, but if we do get the extension
Yes.
that they have coming, if that gets passed, that will come into play again for us. And so, quick example of how it works is, so say you have $100,000 in gains. Say you sold Bitcoin and you have $100,000 in gains. You invest it. By 2026, then you owe long-term capital gains, so you pay that as you regularly would pay taxes in the year 2027. But then the key is past that is if we hold this asset and you have that money in the fund for 10 years, and then you withdraw it, say we sell the property, and now that $100,000 is worth $200,000, the full $200,000 is tax-free.
Right.
That's the gain of it, right? So now you've ended the cycle. You don't even have to 1031 exchange it. You can take that capital, reinvest it into another real estate project. You can do whatever you want with it, right?
Yep.
And that's kind of the benefit of it. It's one of the best tax advantages out there right now.
Yeah, and with the nationwide housing shortage, it would not surprise me if they added back some of those step up in basis to have some of that come back and continue it, but we don't know that yet.
Right. All right, Sina, do you want to jump into just a little bit to clarify between an op zone and a 1031? It's a common question that we get.
Absolutely. So a lot of people in real estate, if you have a real estate gain, have been using 1031 exchanges. And like I spoke about before, if you have a gain in real estate, you can defer that gain if you roll all of your proceeds into a 1031 exchange with an accommodator. There are rules to that, one being that you have to identify your replacement property within 45 days. The capital gains amount is deferred as long as you keep deferring it in other properties, right? There is a capital gains that's created through depreciation. So even if you sold a property for the same price that you bought it for, say 4 or 5 years before, and you depreciated it, you're still going to have a capital gain. And so that's a good way to avoid the gain through a 1031. One of the biggest issues for people with debt replacement, especially when they go to look at a replacement property, is if they can't replace the debt or they're out of time, you're going to owe tax on the entire amount of the debt you don't replace. And that's why a lot of people are using the op zones as estate plans, because they don't want to pass debt along to their heirs. And so when you go in an op zone, you don't have that debt replacement requirement. You also have 180 days from the time that you sell your property, and then 30 months to actually invest it in an op zone, which is really nice. The capital gains is deferred through December 31, 2027. So you are going to owe some tax on that gain at the end of 2026. And then the reductions If you hold it for 10 years, any gain above that is completely tax-free. The 5-year and 7-year exclusions, I think we still have 1 year left on the 7-year exclusion, meaning that if you sold a property and you had $100,000 gain, you would get a step up in basis of 10%. So the taxable amount would only be $90,000 that you would owe. So it's a small amount. There's only 1 year left of that, as I recall, but I have to verify that.
Right.
So, and then from there, it's, 1031 versus an op zone. I think the biggest issue is, well, we've had people that had every intention of being in a 1031, couldn't find a replacement property, couldn't get their offer accepted, couldn't find a way to replace the debt, and found us by default, just saying, what do I do now? And the opportunity zone takes away a lot of those problems for them. So it's a really nice real estate alternative. The fund acts as your accommodator per se, where instead of rolling your 1031 money into a First American Exchange, for instance, you just roll it right from your sale into the OpZone fund, and the OpZone fund acts as your tax deferral accommodator, which is actually really cool. So those are the main points about it. If you have a 1031 and you're having trouble identifying enough properties and being able to close on them, we've had people use part of their 1031 just because
Right.
they couldn't invest all of it. So that it gives you flexibility, it gives you options, and it gives you more time, which, a tight real estate market like we have now is really nice to have, because if you're stuck, we're a good alternative. Or if you just want to avoid the debt replacement altogether and use it as part of your estate plan, that's a good way to go too.
Right. If you guys have any questions on anything regarding 1031s, you guys can comment. We'll try to answer them at the end of this presentation to the best of our abilities. And if we can't answer them, we will find the answers, whether or not through a CPA or a tax attorney. All right, so now we're going to jump into our OpZone fund, kind of what we're offering. It's in Sandpoint, Idaho. We're doing 146 unit development there. Bought the property in 21. This is a downtown area location, potentially one of the most expensive OpZone areas in the country. There's $700,000-$800,000 houses being built a few hundred feet, or a few hundred yards down the way. I think this kind of area was designated as an op zone, and then now this area, Sandpoint's grown by 23.8% since 2020. Alterra, big ski resort or big ski operator, bought Schweitzer. They own Steamboat, Mammoth, and a lot of other resorts. And then, as you can see, the beauty of this place, it's being compared to a lot of the other major resorts as it continues to grow and expand. And so we feel very blessed to have acquired this property in 21 at the time we did, and be able to offer it to our investors. We feel like it is a incredible opportunity. So the offering itself, as I just mentioned, we are building 146 units. It's going to be 4-story elevated. The reason we chose this product type is because it's not really offered in this market right now. So about 30% of the people moving to Sandpoint are 55 plus. And the other people, there's a lot of major employers there. So you have Kochava, you have, Schweitzer, you have Lighthouse Foods, you have Daw Air that owns Kodiak. These are good paying jobs, and they don't have very quality places to live other than homes, which have gotten very expensive. The average or median home price is about $800,000 in the area. So we chose this product type to kind of fit the market needs. Also, we wanted to create a community that has a sense of pride and ownership. So people, as this market becomes more and more unattainable for home ownership, we still want to provide housing where people can call home and they actually want to live. So it's going to be 4-story with elevator. The main level, we will have a coffee shop, co-working space. That way people that are also working remote can go hang out. They can work there. They can rent a small office. They can rent the co-working space. And then building 2 will have a 24-hour gym, some additional co-working space. We'll also have a pickleball court, covered parking, garages. It's going to be a very, very nice property. We're calling it the Tribute because it kind of has some market meaning because it's next to a tributary, but also we want to, when you call it the Tribute, you're walking around town, we want people to think, I live at the Tribute. So that's kind of the philosophy of why we designed the project the way we did and why we are offering this offering for investors to come in. So as mentioned, big reason we are delivering this market type is because of this massive rent-to-own gap. So median home price about 800,000 there, but the average rental price is under 1,700. So that's kind of almost a 65% difference in the rent-to-own between a mortgage and a property. It's good for investors. That's also going to tighten. The gap will tighten. So as this market shifts, we will increase rents and it'll be a better return for our investors, but also still be an affordable option. We're basing our rents at average about 95%, but we are going to have rents that'll go down to 80% AMI. Those will be more of a affordable product for our one bedrooms, kind of a loss leader to keep people intrigued at the pricing, and then we'll go up through there. We'll have 2-bedroom, 2 baths, and then we'll even have some furnished units for traveling nurses, people that just want to live there seasonally for the ski or for the lake. It's also an incredible place in the summertime. So the location, so we are about 10 blocks from the downtown Sandpoint. So you can walk, you can easily bike there. Very good location. Schools are within 5-6 minutes away. There's actually one school across the street, elementary school, same idea, within 5 or 6 minutes away. And then you're about 17-18 minutes to Chair 1 of Schweitzer. So you're at a very centralized location. So again, in the summer, you can enjoy downtown, basically right out your back there. You can walk there. And then in the winter, you are about 5 minutes from the bus stop if you wanted to take up to Schweitzer, or you can easily drive up there, quick 20-minute drive, and you are at Schweitzer. So we love the location. As mentioned, a lot of major employers are emerging in Sandpoint. You have Daw Air. They have about 350 employees there. We actually toured that facility. What was that, about a month ago, 2 months ago, guys?
Yeah.
And they're building aircrafts there. They want to expand. Their biggest issue is employees. They want to bring more people there, and they have nowhere to live. So again, we are pushing to solve that issue. Lighthouse Foods, they are headquartered there. They're kind of famous for their ranch dressing, but they're a large food distribution and manufacturing company. They continue to expand in Sandpoint. A lot of their office employees also work there. And then they have a distribution center that's only about 300-400 yards from our facility as well. So again, paying jobs right out your front door. Also not mentioned here is Conixu Health. They just built a brand new medical facility next door to our property there. It's probably about 30,000 square feet of medical, so primary care, massive facility, kind of they're a direct provider for a lot of North Idaho. Then you have Coachava. They have about 173 employees. I actually know the owner pretty well personally, and I met with him this last summer, and he said, again, similar idea. Their biggest issue, they have about 100 employees that work in the office, and the other 70 plus work remote. They'd love to have more people local, but nowhere to live, and home ownership is very expensive.
Mhm.
And then Altair and Schweitzer. So as they continue to expand, they just acquired it August of last year. So we just had our first ski season, and they kind of understand operations, but they're already planning. There's expansion plans. There's a plan for a new village. They're putting a lot of money into Schweitzer. It's also part of the Icon Pass. So it's bringing more demand there, more demand, more growth. As you can see, just it's good all around for our project there in Sandpoint. All right, projected return. So we have a total project cost with contingency of 42.5 million. We have building 1 in the city right now. We are doing everything we can to actually lower that price as much as we can to make it even better for our investors. Offering is 21 million. We're raising money as we speak. We're just over 7 million raised today. Is that about right, Sarah? Does that sound right, Sarah? Just over 7 million, I believe, today.
Yep.
Pushing for more, having daily calls with investors, pushing for a 15 to 18% return on this one. One thing I like to tell investors is this is a as the development sits, it's very standard returns. It looks like a lot of developments you can invest into. But what this project offers that others don't is the market. So Sandpoint is just at the tip of the iceberg for liquidity, money entering that. There's a lot of wealthy people building houses on the lake. It's kind of becoming, as it moves toward, maybe a Big Sky vibe or a Jackson Hole, or people compare it to Lake Tahoe. But just as more money comes there, it's going to increase rents. So if we get to rents that a lot of these other resort communities already have, it's going to do significantly better than a lot of other development investments you can invest into. But we've underwritten it just as the bank wants to see it, just normal rent growth, normal appreciation. So as it sits, it's going to perform well, just without that extra liquidity entering that market. We're targeting 8 to 10% cash on cash return. So that's going to be the average over the hold period. Target cap rate, we're pushing for that 6 to 7% cap range, 6.5 kind of the average middle there. 3x on your equity over a 10-year hold is our target. And then of course this is a 10-year hold. Given the op zone, to get the benefits, we need to hold it for 10 years, and it's new construction with a $100,000 minimum investment on this one. All right, John Jr., do you want to jump into a few of the property features we've chosen for this one?
Yeah, absolutely. Thanks, Tony. With this project, we really wanted to gear towards amenities that made sense for the community. It gets cold, there's long winters in Sandpoint, so we did quite a few things indoors. Actually, almost all of our amenities are indoors, except for a pickleball court, of course. And so having a gym, having a coffee area, having storage, just a lot of things that just help people thrive and love where they live. We had an idea for a dog wash station from a place just down the road from me that has dog wash stations in a well-ventilated room, and it works out great and people love it. People are there all the time. So we're looking for things that we would use as tenants. We've been renters before, and we tour a lot of apartment complexes all around the country. We do that because we want to see what people like to do and what keeps people at these locations. We'd love for tenants to be there 10 years. The rent's probably not going to be the same over 10 years, but if they love where they live, they'll stay. And that's what we want to create here through our property features.
Yeah, one thing you mentioned, John, which is one of my favorite parts, is our storage. So a lot of apartment communities, they put their storage on the balcony. So Sandpoint's a very outdoorsy town, so all of our tenants would have to bring their kayaks, their paddle boards, their skis through their halls, up the elevator. And so we put all the storage on the main level, and then at the end of the parking, the covered parking, so that way you get out of your car, you can unload all your outdoor stuff right there instead of lugging it through there. And future, kind of as the market transforms, that'll also be a revenue generator for investors and for kind of returns long term.
Yeah, one more thing I wanted to add to that too is this will be an elevator service building. That's pretty important. And I've seen a lot of apartment complexes being built across the Northwest, even with 4-story walk-ups. So I just wanted to put that out there, that this does have an elevator, which is pretty crucial for that demographic. A lot of the older folks moving there as well.
Right. Good point. Awesome. So this was a high level overview of the project. If you guys want more in-depth details, we have a full presentation, full offering on this investment opportunity. Also happy to talk to you guys, schedule a call with our team. We will go over every detail of the project. We are fully transparent. We want you to understand this investment, tooth and nail. We are transparent. And if you decide to trust us with your money, we want you to understand what you're investing in. So if that is something you're interested in, again, book a discovery meeting with us. You're going to want to review that offering. We want you to understand it. That's our biggest thing. A lot of the issues faced in the world right now with credit issues, I believe, are because investors didn't understand the investment that they are investing in. And that's our goal, is for you to understand exactly what you're investing in. That's very, very important to us. If you like what you're seeing, you're going to review the documentation. You're going to provide us with an accreditation letter. Again, this is a 506C offering. We can only take accredited investors in this offering. You're going to review subscription agreements, limited partnership agreements. and everything that goes with it, which is all in our offering link. If you continue to like that, then you will tell us you want to invest. You're going to fill out the subscription agreements. That can all be done digitally. And then we are going to have you in. And then as soon as the project is done, leased, and stabilized, you're going to start realizing your returns. All right, and that sums it up. So if you guys have any questions, which it looks like there are 2 questions I'm looking at, can you please talk about OpZone investments from IRAs? Is this possible? And if so, what are the tax implications? Thank you. Oh, you're muted, Senior.
I can take that one. We do have a lot of people that use their IRAs to invest in our projects with us. Typically, the way the IRA investments work is you have to be in a self-directed custodian. We work with several. Probably the one we work with the most is a company called Entrust. And the way those work is you set up an account with Entrust. You roll your IRA from wherever that is, say it's, at Fidelity, over to Entrust, and then you and I and Entrust will sign all the paperwork, and then Entrust will actually wire the funds to us from your IRA account. You want to make sure that you don't take that money personally because that creates a taxable event. But we've done, I don't know how many now. It works really, it's actually really easy. And then when we do distributions every month, that goes into your account automatically. And so you'll see those deposits hit your account at Entrust. And then from there, you're free to withdraw it whenever you want, however much you want, as long as the balance is there, obviously. But IRAs, we have a lot of people use IRAs, and they're a great way to defer, a lot of income. So.
Yeah, I don't want to hit on that, Joe. IRAs are already a tax advantaged investment account. So that is something you want to talk to your financial advisor about. But given that they're already tax advantaged, you're going to be investing tax advantaged money into our project. If you decide to, we're going to be paying it back into your IRA, which then already has the tax advantages. So an OpZone won't really benefit you on that tax front. Unless I understand it, which again, if you're above the age of 59 and a half, there may be some benefit. If it's gains that you're going to realize from your IRA, there may be some consideration there. But if you're just investing it from your IRA and then it's going back into your IRA, you're already tax advantaged. So it's probably not the most useful tool in that case. So Dan, we appreciate the comments. You'll be our first tenant, so let us know when you want to move in. We've got the keys. We'll have the keys ready in about 2.5 years.
Yeah.
All right. And then last one, to be clear, even if you're not using this to reinvest cap gains, if held for 10 years, any cap gains from the sale would be eliminated. That's not true, unfortunately. So if you are investing as an investor, and you are not investing capital gains, it is treated like any other investment. So you will be treated the same as you would if you invested into a non-opportunity zone investment. So you would have capital gains, which there's a number of things we can look at talking about doing. That's more suitable to what we normally do. Any other deal that we do outside of OpZones or that. So we're very well suited on how to work through gains and work through different options to defer or to reduce taxes as much as we can if you're just a non-capital gain investor.
Mm-hmm.
All right, that sums up the questions then. If you guys have any questions, feel free to email us or call us. My personal contact info is over there, and so is Sarah's. We'd be happy to answer any additional questions you may have or send you over the full offering and again, answer those questions. Thanks for joining, everyone.